Hello everyone, hope you're doing well. I want to do a little bit of market review about NQ, ES and DXY and give some key levels for the next coming days. Let's jump right to NQ. So in all of this run, and if you take a look at the lower time frames, this is daily time frame. If you take a look at the lower time frames, you'll see that we had this as the first valid high. Then we had the second one here. And we had the third one here. And we had the fourth one. And you know that we count in the swings and we want to see change in the trend after the fourth swing or after the sixth swing, right? So the last low that made the last high, we're going to take this and put it as our zone. And since we didn't mitigate that zone in here, especially we tapped at the upper part, so we're waiting for the 70, and since this is the fourth swing, we expect price to change the trend. All right, so we traded below, we closed it below this zone, which makes it now a flip zone. So we want to see a trade inside at the 50% and then target this low. And since we had also an unmitigated zone in here, we want to trade at least at the 50%. So you could take the trade from here, like one member named Pat, he took a trade from here to here. Sorry about this. So since we traded at the upper part of the zone in here, and we made another high, so the 50% won't be our key level to enter longs, right? We want to enter longs at the 70, which happens here. And what do we target? We target the first high that brought price to mitigate the zone. In this case, it's here. What happened? We tapped into the 70 and took the high. We came and we tapped in at this zone in here, right? Also at the extreme of that flip zone. Then we traded below. We close it in here, which makes this now a flip zone. So what do we want to see? We want to see price trade like this in here. You see that we have this. So we tapped into the lower part of the flip zone and we traded below. So we are interested by the 70%. And what do we have in the 70%? We have also this void or imbalance or whatever you name it that needs to be filled. So that in the next days, what do we want to see? We want to see price trading. Maybe it will happen today, Friday. We want to see price trading here, and maybe, not sure, trading below to mitigate the zone. Sorry, not to mitigate. We mitigate that zone when we trade at this 70, but we have like a setup that I learned from Dave. When we mitigate fully when we mitigate fully the flip zone or the zone, we trade at the extreme. And in this case, maybe we're going to trade in here, and maybe there will be some lower time frames imbalances or unmitigated zone in here. Why price came until here? We have this entire zone that wasn't unmitigated. We traded here, took that high, and in this case we'll maybe witness in real time the Phoenix setup that I shared a few days ago. Because why? We have this flip in here. We flip it because this is the zone that brought price to here. Then we traded above. We came, we tapped in at the 50% and we made another high. And the Phoenix setup, this is the first sequence. So you want to see the high taken, then retracement deeper into all of this zone, then trading higher. It will take time because this is a daily time frame, okay? And like what I wanted to see and what I want to see in price is trading to the 70, feeling this, trapping buyers, and then trading higher. All right, this is what I want to see, but it won't happen always like we want, right? Okay, so we finished with NQ. Let's go to ES. Same story for ES. We had first one, second one, third one, and the fourth one. We had also this entire zone that wasn't unmitigated, and we'll see that in ES there's really a good precision than NQ, right? You see that we tapped in exactly at the 70%. You see that in here, tapped in exactly at 70%, and we are leaving the range to trade at the extreme. What do we have also? We had this zone in here, and in this case you see that we tapped in at the 50. We delivered a one-to-one. By one-to-one I mean from the midpoint of that zone to the extreme, then we traded lower. Now that makes this a flip zone, and we traded, you see here, this wicks, we traded like this on the lower part. So we expect the 70% to be the levels where we look for shorts to target the last low in here, right? And in this case we had this imbalance or this void that was mitigated and filled. Then we had all of this drop. You see that we had this zone also, and we traded at the 50, and same thing that I'm saying that applies to everything, the 70, 30 and the 50. So we want to see price trade, we want to be looking at the longs in here, and in this case I won't take any longs because this zone is above a bigger zone that is unmitigated. So 100% the low of this zone will be liquidated. Why? Because we need to mitigate lower. This is why the context and the narrative that you should build on market structure in the higher time frames so you can trade easily the lower time frames, right? So we mitigated this. Now about this flip zone, we had the same thing, and we traded at the 50 only here. So we want to see the 70% or the high and the extreme of the zone be traded to, like here. So what I want to see, maybe trading here, wicking through this void and this imbalance, and then trading below, and maybe trading higher after that. What I'm sure about it, we'll never be sure, right? Is that this level, which is 5,434, and this one also, and this one also. So this is the key levels that I'm looking for, and maybe we're going to do it on Friday. This is the key levels that I'm looking for ES. It's literally the same thing as NQ, but NQ is more volatile and it's more dangerous to trade NQ. The reason why we traded and wicked in here is that for NQ is that, let me show you the precision and the precision of the hidden S&D. So the same thing about hidden S&D applies to the zone and the flip zone. We traded at the 30%, we didn't mitigate fully the hidden S&D, so we want to see price trading at the 70, which happened here. This is why, because in all of this price action, everything was like mitigated, because we had this, then we traded above. Okay, so let's jump to DXY. For DXY, I'm not really following it, but I'm just gonna say that in this price action in here, there's only this zone that is unmitigated. That is unmitigated. Why? Because when we traded above, then we traded below, we didn't mitigate the 30%. We didn't mitigate the 50%. We mitigated, we tapped in at the upper part of the zone, then made another high. So the 50% won't be considered as our protected low. And what happened here? We took that low, and what I want to see is price trading at 101,712, this one in here. So I want to see a drop like this for DXY, which matches with ES and NQ going higher, right? So that's all for maybe Friday and the next week, and then we see what will happen.